Good evening, everyone, and welcome to our another special session with Neil Bell. He's the founder of Negen Capital. Negen Capital has been like top, one of the, I wouldn't say one of the, it's the top performing uh, fund in its category in India over the past 1 year. And so he specializes in special situations opportunities investing, and he's also very much into tech driven opportunities as well. So, Neil, thanks a lot for accepting our invite. It's a privilege for us to host you. Actually, DI Clubhouse sessions are a bit different from the usual sessions that we see on internet here. Like all the monitors will be will try to dive deeper into your thought process and how you're able to like get such good returns in your portfolio. And we are very excited for it.
No, thank you for inviting me. I'm happy to be here. Always nice to, come and chat with like-minded people.
Right. So, let's like start with your journey. How did you started in investing, and how it has been, and till this point.
So, my journey has been just like anybody else's journey. The only, I guess, little difference would have been that I started very, very early. And I think that played a key part in the evolution. So, whoever starts in market, you have to go through this tuition period where you have to make a lot of mistakes. So luckily for me, I did those mistakes at an early age, and I came to some clear conclusions. I started at the age of 15, by the way, and I came to a lot of clear conclusions quite early on. I knew that investing works. I realized this. I invested in a couple of IPOs, and those IPOs became super hit. I think it was one was Petronet, another one was Yes Bank, and instantly you just knew that you don't have to do much. Just identify good businesses, invest, and even if the markets fell, all you have to do is do SIP, and you need to have courage and you just don't need to worry all the time. What will the market do? What will the market do? Just remain invested, and things will come into place. And over the years, of course, one starts exploring newer things. So the basic foundation was there early on, and I learned about special situations. Um I did a lot of work on it. I realized I went deeper into this what special situations mean, and for example, I so much so that I went and saw what Warren Buffett was doing, and I realized that while he talks a lot about value investing, his kind of value investing is not the plain vanilla value investing. He says it in a very simple way that buy some asset which is below its intrinsic value. It's a very generic way of putting things. But in his portfolio, when we went and saw what he was holding, when he was doing fund management for others, he was only doing corporate restructurings. He was almost, I would say, entirely 100% invested in special situations, which he at that time termed as normal value investing. The term special situations was, I think, more brought into the limelight by Joel Greenblatt. But so at an early age, I realized that value investing karna hai. You want to buy something which is having good growth prospects, but pay attention to valuation. So this started me on a different trajectory and different journey, and it paid rich dividends over the years. And of course, recently got the idea that yes, you need to focus on the internet and focus on technology related theme. So in my journey, I realized these things, that do investing, not worry about what other people are saying, just focus on what you are doing, and then develop your skill sets along the way. And eventually, once you come across what suits you, just do it. Doesn't matter what other people say. So I'll give you the timeline as to how it worked out. Started at the age of 15 when I was in the 10th grade. I think I was in SP Gen. It's a institute in Mumbai, and I was restless that time. I think I was about 20 or 21, And at the age of 21, I decided that enough is enough, and I must start my company. So I started with this Negen Capital when I was 21 years old. Um that time, yeah, of course, I dropped out of college. I think that's an important disclaimer also. So I quit college midway and I started the company. At that time, I did not have enough capital to do much. So the only idea was to become a sub broker. So I became a sub broker with angel broking at that time. And I built a community. Social media platform that time was Orkut. So I built a community there. I helped people with informal advice as to what they can do, what they cannot do. And soon enough, uh, I became financially independent. And after many years of learning what I just explained and developing my skill sets, uh, we just recently decided that yes, now we can take the official PMS license and do this professionally. And no looking back since then. Last year, in fact, we also started with our startup investing platform. So we are the only one place where you can do PMS at the same time. You want to explore startups, you can explore startups also with us. So yeah, this is how we are shaping up right now. This has been my journey.
Sounds good.
Sounds
So,
good. So,
Neil, I guess we get some sort of echo. All right. So, any moderators who wants to ask any follow up question?
Yeah, Utkarsh. Neil, I found it very interesting that you mentioned that you dropped out of college and then decided to go ahead and pursue this. But of what I remember, I think we have each other on LinkedIn, and your profile says that you went ahead and did an MBA in 2007. So I think this is a part of your story that not many people know about. So how did you go from dropping out of college to doing an MBA to then starting Negan?
Yeah. So that is the one I dropped out of my. It was not an MBA. It was an FMB. I dropped out of that very particular course. I didn't complete it.
Oh, so you had done your bachelor's first at HR,
Yeah. Of course. Yeah. That I had done.
and then you dropped
Yeah.
out.
Yeah. This is the higher education.
No, because I was asking. I think SEBI requires you to have a graduation to get your
Yeah.
license.
I'm in the middle of doing that right now.
Okay, okay, cool.
And Neil, like how has have you seen? So since you were like one of the early adopters of special situation opportunities, right? So how have you seen the evolution of this particular strategy in India over the years? I'm seeing like a lot of people now, it's the awareness is like much high as compared to you may say 5 years or 10 years back. So and since like a lot of people start getting active into a particular strategy, the alpha goes down. So how do you see the evolution of this?
So special situations it just become popular now, in the sense that yes, people are understanding what it is. But it's been happening since a long time in India. Like I think the first one which I remember happening in India, which at least on which I paid attention, was the Reliance demerger, when Mukesh Ambani and Anil Ambani got a piece of the different businesses, and that created immense value when that happened. A lot of the Anil Ambani businesses went up after that. So it's been happening. Not many people knew that this is called special situation. People thought, okay, yeah, this is value unlocking activities. Now we just termed it. So most of the investors already know all these things. The only thing, see, it doesn't matter if normal investors like retail investors or HNI investors know about this or not. What matters is, can institutions do it? And largely, by and large, institutions avoid special situations because for them it's a lot of hassle on the compliance side. Like for example, a large cap mutual fund, if just when it knows that a large cap company is going to be split into two mid caps or two small caps, it it knows that not to get involved in it, because then it'll have to sell the units after they get demerged, for example. So they typically avoid getting into this. So that leaves a good hole for people like us to, do what we do. So I don't see that, even if it, social media may became got some appreciation now. So I don't see it causing any trouble. There are special situations happening every day. I mean, even I feel difficult to keep track of everything.
All right,
All
all
right,
right.
all right.
So,
So,
like,
like,
which special situation opportunity didn't turn out like you expected, right? Matlab, a lot of time it might happen that you had planned it in a certain way, but things didn't turn out that way.
Yeah, I think it happens many times. It's not a given that some in a company doing special situation that means the stock must go up. Definitely not. So many times we have to kind of figure out as to which ones are firstly serious to do it, go through with it, and which ones are just doing it for getting attention. So many a times a company may announce a demerger, but then not follow up with it, or it just gets delayed indefinitely. So in those cases, investors end up making loss. So in my experience, I did one special situation in 2018. I think it was the CESC demerger, where we would have made a lot of money, but in the middle of the demerger, there was a regulatory issue. The Calcutta Electricity Board did not allow for the full demerger to go through. So it was a haphazard demerger. So we didn't make any money. We got out of it in a break-even situation in a bear market. That too, 2018, the stocks were falling quite a bit. So we didn't make money, but also we didn't lose money. But we wasted a lot of time. We wasted almost 1 year, 1 year plus in it, and didn't make any money. So many a times this is the risk. The risk is that it'll get delayed, or the risk is that the promoter may just cancel it. That is the big risk more than the value unlocking risk.
And coming to that, right? So you talked about opportunity cost of like holding on to a position. So how do you do the portfolio allocation part of it, right? How much do you try to allocate to any particular position, and if there are any certain metrics that you follow for it?
So what I see, since we are managing public money, we can't anyways be very, very aggressive in doing things. We have to find a middle ground and focus on also not losing money. So when we do things, we like to have a broad portfolio. So right now in our portfolio, we have 30 businesses. So one of the things that I do is I spread my investments. Don't need to just participate in three or four. So I'd like to have 10 or 15 on the special situation sides at all time. So these are the few things I focus on in terms of watching my risk.
Right, right.
right, right. So,
Allocation is like you talked about. So but how do you like allocate percentage allocation to a particular special situation opportunity? Suppose you have taken a position and the date suppose is coming nearby. So do you increase the allocation then, or maybe after the demerger has happened? How does that work?
So what happens is that special situation is like a game of flush. I mean, teen patti, we all play. There are lots of variations to it. It's not a simple three-card flush. Whoever wins the best card. There are many, many, many variations and different ways of doing it. So we have to first develop an expertise doing it for many years. You get a sense that how much exposure to take at which stage. So, for example, when it is just announced, I don't like to take a big position because there's a good chance it can get delayed, it can get cancelled, uh, and at the end of the day, you have to figure out whether to buy before or after, because many a times the most money that I have made after the special situation is done. So for example, first of all, some of the other people who do special situation, they don't even consider. So the whole concept of special situation is misunderstood in India. People think कि demerger के X date तक it's a special situation, and after the demerger is done, it becomes a normal situation. Actually, it's far from it. The special situation continues even on the spin-off as it is listing on its own. So why? Because many a times after the spin-off, as I said, these big institutions have compliance issues. So many a times I've seen that these big mutual funds keep selling. So it did sometimes take 6 months, 8 months, 8 odd months to finish selling, and the price remains depressed and keeps coming down. So before we kind of figure out what kind of allocation we need to do, we need to figure out, can this particular company which we are targeting in the special situation, out of the two or three division, we may be targeting one division. Will this thing see selling after the special situation, or will it see buying after the special situation? So many a times I knew that this particular company is going to see selling. So I'll tell you an example. There was a company called Aarti Industries, which had a demerger of a very small, tiny unit called Aarti Surfactants. And I read a couple of brokerage reports. I'll not name the broker, but in the brokerage report, it was written that the pharma division is good, the chemical division is good, and then they are written about Aarti Surfactants. They actually use these words. This is just gravy. So they called it gravy. So I knew that a lot of these institutions are getting advised by these, you know, brokers who don't understand clearly what they are saying. That this is just gravy and sell it. So I knew that Aarti Surfactants is going to see selling after the demerger gets over. Whoever on the FII side or the mutual fund side bought bought RT Industries for RT Industries. Not one single person bought RT Industries to get exposure to RT surfactants. So I knew the selling was going to come. So we didn't buy before demerger. We waited for it to list. So it listed, I don't remember the exact price. I think it listed around 450 rupees. And the selling started, selling started, and it fell to 222 in one side. And on the day of 222, suddenly volume started appearing on lower circuit. And we were watching it like a hawk. And we thought, okay, now this is going to open here. We are getting a extraordinary price already. Let's not be greedy. So we bought in the lower circuit ourselves at 222, which ended up opening the lower circuit. And the price quickly jumped in a month's time from 222 to 509. We exited at 509 thinking that we did a great job, that we more than doubled our money in a single month. Within 3 more months or so, or maybe 4 or 5 months or so, the price was 1800. So it became a nine bagger in practically 6 or 8 months, something like that. So special situations have many, many different ways of, like, for example, if you waited like this for the tips industry special situation, tips ended up becoming a 10 bagger before the special situation even is, nearing halfway mark. I mean, it's still going to take some time. But in tips, I was very clear that there is no need to wait, because after the special situation, there is going to be no selling. There's going to be buying. So why not just buy it right now? Because you're getting it at a very cheap price. So as I said, there's no right or wrong, but there is a lot of instincts involved over here. That comes only from experience.
So,
So
hi, Neri. I have a follow-up question on this Aarti certificate you touched upon. So, was it reading the tape or something you checked on fundamentals? Because I can totally relate what you did there. I mean, it looks more like a technical trading kind of stuff, right?
No. So we knew at what price range we wanted to buy at. We thought that we can even make money buying at, let's say, 400 rupees. But when at 400 rupees, it's such a big, large lower circuit. Why will I go and help someone out? So I waited, and incidentally, from 460 fell to 400. It fell to 222, and at 222, I started seeing volume at lower circuit, and I knew कि ये अगर खुल गया तो सीधा upper circuit में जाएगा. So I thought, okay, forget it. Now whatever happens doesn't matter. It's in my zone where I was happy to buy. So I just took a chance and I bought it. So yeah, there is looking at the tape also. Of course, you have to look at the tape. But ideally, we did a lot of work on it, and we knew that at this price, it's a no-brainer valuation wise.
Okay, thank you.
So Neil, I think you know we've heard a lot from you about special situations, but recently you started to pay a lot of attention, at least in the communication that you've been putting out about mega trends. And some of those mega trends that you've spoken about are mainly music streaming and QSR. So I just wanted to know what got you interested all of a sudden, because it's almost like from nowhere music streaming became a hot topic on social media, and now QSR is becoming that way. So what got you interested, and how do you see these sectors moving forward?
So I think, so as I said, I got interested on the internet side, and I started doing a lot of work, not only in India, but I started seeing trends in China. I started seeing what is happening in America on the technology side, internet side. So I started talking a lot about technology to everyone. Unfortunately, I got misunderstood that when I meant technology, I meant only the new age technology companies. Um, if you open our portfolio and see, almost entirely our tech basket is comprising of traditional businesses which are using technology in a massive way to transform themselves. And QSR and music are at the forefront of this in our portfolio. We are very, very strong on QSR. We are very, very strong and bullish on music. So if you see the music, though I have explained and many people know what has happened. On the QSR front, this is very interesting. Like if you see the normal restaurant business, it is probably the worst business in the world, restaurant business. It, at least it was until 2018, whereby it was just requiring too much capex, too much hassle to run a business, and too much uncertainty of a single location and stuff like that. Customer only it, one restaurant can only serve a certain locality. So I was never interested. I thought ki this is like very bad. That time there was specialty restaurant listed, and I was like, no chance, forget it. But suddenly I started paying attention to what is going on in America on the side of DoorDash and other things, what they are doing. And I realized that while DoorDash was not profitable, these QSR chains benefited from DoorDash and the connectivity and the change of customer preferences. And I thought if this happens in India, we are going to follow the same thing that is happening in America. There are a lot of these big QSR chains have become very big now and created a lot of value for investors. So we started tracking, but we knew that the unit economics are not in favor. Suddenly, especially in this pandemic period, Indians for the first time started embracing technology. Whether it is my mother and father or anybody else who are aged or even our side, like even I never used UPI until before the pandemic. I used to always rely on my wife to do the UPI transaction. I used to find it very complex. But during the pandemic, it was something which was forced upon us. Ki download that goddamn, Google Pay on your phone and do something with it. And then we came to the conclusion this is like super simple and super easy. And so we were forced to use technology for the first time as Indians, and we got hooked onto it. Then came the concept of, you know, everyone's at home, so let's start ordering food. So Swiggy and Zomato as a business really took off in India. And because of that, the customer has now completely changed. Like you want to call over friends, you want to watch some TV, it's late night. What do? Order a coffee. Just it's a reflex now. Go to Zomato, go to Swiggy. It's a reflex. Order a coffee, order a pizza, burger, whatever you feel like. So what this has done, This has made the QSR space, which is the quick service restaurant space, a quasi technology company, quasi technology space. There's a lot of tech getting involved. So earlier, like a KFC outlet used to be a 3,000 square feet outlet because they were relying on the customer to come and dine in the restaurant. Today, 50% of revenue suddenly has come from cloud kitchens. So any further capex that the Devyani International does, or what Sapphire Foods does, is a 1,200, 1,300, 1,400 square foot new outlet. So their cost in terms of rent has fallen by 50%, manpower fallen by 50%, the furniture, fixtures, maintenance, all those things fallen by 50%. What that has done, what the store level ROIC used to be 30%, 25, 30%, is jumped to 60, 65%. So the ROIC has gone up significantly because of the adoption of internet and the adoption of technology in this business. And what these guys have now realized, that they don't need that. Even with a 1,200, 1,300 square foot outlet, their revenues are not suffering. Their revenues are still up because cloud kitchens have become a huge part of their revenue stream. And now you're seeing that in the numbers of Sapphire. Sapphire reported earnings today in a rising inflationary environment. It's reported a huge jump in EBITDA margin. How has that happened? It's happened because of, thanks to Swiggy and Zomato, these guys are getting benefited in a big way. So I was one of the first guys to call QSR uh, a technology. I'm actually quoted that QSR is a tech play, and people used to laugh. You're calling a restaurant a technology business, but it is. It is actually is, and you're seeing the numbers. And see, it was always a great opportunity on the revenue front. We knew that McDonald's will sell more burgers every year. There was no doubt on that. The doubt was on the unit economics. How much capex, how much royalty they pay, can they make a enough return for themselves in terms of return on capital and stuff like that. But now that is changing. So while the revenue is set, 25% revenue growth will happen for the next probably 10 years. But now it's going to happen with higher EBITDA margin thanks to technology. So this is what I mean by mega trends. And there are about 7, 8 sectors in the economy today where there's going to be no volatility. I'm sorry. They are going to grow, and they are going to grow, and they are going to grow, and they are available at decent valuations, and they are going to re-rate. So there's no need to be doing coffee can kind of investing anymore. You need to be getting into things that can re-rate. कॉफी कैन में एक प्रॉब्लम है कि वो री-रेट कैंडिडेट नहीं है, वो डी-रेट कैंडिडेट है. You buy a stock at 100 p, you're only setting yourself for getting it at a 90 p or a 80 p. It's not going to re-rate higher. Here you're going to get high growth with a good chance of re-rating. So that's why we focus on, we've called them technology, we've called them mega trends, you can call them whatever you want, but these kind of sectors are going to do good.
So we
So
spoke a
we
little
spoke a little
about
about
QSR and music streaming. Can you mention what some of the other sectors look like? Because you said there would be seven with low to no volatility.
So there are many. So one area that we like a lot is the electric vehicle space. It's a no-brainer, right? Everyone who's involved in this area knows that over like auto industry is a cyclical industry, but the electric vehicle space over there is going to keep increasing its share of the pie. So we don't want to get involved with the electric vehicle manufacturers. We want to get involved with the IT players who are supporting them. So, I think in late 2018, there was a demerger. It was one of the best demergers of the time. KPIT was demerged and the other company became Birlasoft. We loved both of it, but I loved KPIT even more. But for 1.5 years, KPIT was struggling between 60 and 80 rupees. And in the 2020 crash, it fell to 35 rupees. And I was like, I couldn't believe what is happening. So at that point of time, I knew that electric vehicle is going to become a major force. And I don't want to, because there was no clarity ki which electric vehicle player will survive or do well. But I knew that these guys who are servicing a lot of the electric vehicle players, they'll eventually do very good. So we picked up KPIT in the demerger. It was practically at a single digit PE at that time. And we just thought, "Ki, theek hai, we've not made money for 1.5 years, but we were very happy holding it." And it came good. And I think even now, right now, I think is a little bit overvalued. We sold KPIT already. But if KPIT, LTTS, Tata Elxsi, these kind of companies came down, we would love to kind of re-enter them. So electric
Right.
vehicles is a one big space which I think is a mega trend. Music is another. QSR is another. Then there's a SaaS. In SaaS, I feel there's a big opportunity. A lot of these companies, especially on the unlisted side, on the startup domain, are doing good work. There are some micro cap SaaS companies which we are tracking, and we may buy, of course, which I can't name because they are too small. Um, so there are many such industries where I think revenue side we're going to see no volatility, and investors, if they get a good entry point, will end up doing good. And if we mix SaaS with special, I mean, if we mix mega trends with special situation, the portfolio will do good in all kinds of times.
Fascinating. I
Yeah,
also
so
wanted to
Neil,
ask you a little bit about, because you talk a lot about SaaS, and just the last time that we had you on Twitter Spaces, I was able to ask you a little bit about international investing as well. So I just wanted to again, for a lot of the audience that might not have been there, how do you view the SaaS opportunity? In India and abroad, and how would you split that as an investor between India and international investing?
In India, in the listed space, it's not too compelling in terms of opportunities. They are good ideas. Like rate gain is part of our portfolio. We like it. Intellect design is another one which we like. Um, but the real opportunity is in the startup domain. So we are exploring opportunities there. Uh, and the real big opportunity right now, it's I think a generational opportunity is happening in US, where a lot of these companies have fallen quite a bit. Like for example, Freshworks now is trading at $19 today, down 12%. I just checked the charts before coming here. So it's down to $19. I think these kind of companies are the good ones, where you don't get this kind of quality in India. So if you make a basket of SaaS companies in America, in the US market, I don't think for the next 4, 5, 6 years anyone can lose money.
Awesome, Sakit, you had a question.
Yeah, thanks, Krishna. So, Neil bhai, one question that I had. So, I think you talked about the QSR space and how they are leveraging technology. Now, if we look at within those companies, be it Devyani or Burger King or even Sapphire or even Domino's, then amongst all these players, Devyani and Sapphire are more dependent, so to speak, right now on say Zomatos and the Swiggies of the world because their own app has limited contribution, whereas likes of Domino's, if you look at their app or the way they operate their business is much more tech driven. But I think you still went with Devyani and Sapphire. So was it valuation or maybe something else that we are missing when it comes to tech play within QSR? So again, why not Domino's? Why Sapphire or Devyani?
Yeah, so valuation was a key differential. Now, as of right now, Devyani has nearly doubled. It was at 110 or 15, and now it's like 180. So it's become a bit on the expensive side. But Sapphire, on the other hand, is still at a significant discount to Devyani. And today's earnings will mark a change in winds for Sapphire's valuations in vis-a-vis Devyani. I think now it deserves to trade at the similar kind of valuation. If they've proven that they can also start printing similar margins, they're not yet there, but looks like they will get there. The momentum is there. So it was definitely a call on valuation. So right now also we have Sapphire as our number one position. followed by Devyani.
And one question that I had. Sorry, there is some. Yeah. So when you talked about special situations, so do you have say any framework in mind when you evaluate that? Okay, this is an investable special situation. Say two or three key points before you just to filter out, because as you rightly mentioned, and if you have the right lens, then there is always some sort of a special situation playing at a given period of time. So some initial frameworks or thumb rules that you can help us to at least filter that, and if there are some further double clicks that you do, then that would be very useful.
Yeah, so I like to do structural plays more than cyclical plays. First is that. So even on the special situation side, I avoid cyclicals. So while I agree that I did the Vedanta delisting because at 90 rupees I thought one can't really lose money. Then we also own this India Bulls real estate where we've done okay. But the first thing is to own ideas in special situations where you believe in it. So KPIT, I really believed. Max Healthcare, I really believed. Where I knew that they are going to not stop. They are not a like how Buffett called it. They are not cigar butts where just one puff is left, you take it and exit. It's not like that. These companies are actually good investments available at a very very throwaway valuation. So a clear yardstick is of course the opportunity size, and you must like it. And don't look at it as a trade. Whichever special situation you can look at yourself and say, okay, I can see myself holding this for a long period of time, even once it becomes a normal situation from a special situation. When the valuation does even catch up, I will still not sell. So Max Healthcare, for example, we've still kind of not sold completely. We still have a small position, which we think that we'll hold it and we'll see how the situation evolves. So some framework is that avoid the cyclicals, stick to the structural stories, and of course wherever you think that the valuation is going to be in your favor, stick to those. And as I said, there are so many variations, you don't know which kind of special situation may play out. uh, so making frameworks is not very easy in a special situation. For example, uh, I think in 2015 or 16 there was a demerger and a promoter change in a company, Crompton, where Advent private equity fund bought it, and the stock went berserk. It re-rated in a big way, and it was a one of the best special situations at the time. The demerger and promoter change in Crompton. I see a similar. Of course, I'm talking about the name which I'll talk. Of course, we own it, and it's definitely not a buy advice. A same situation, a mirror image going on in Forbes, where Aquaguard is getting demerged, and then the same private equity fund who bought Crompton is buying Aquaguard. So they are themselves just repeating their playbook. And as investors, no one paid attention, even though recently a lot was spoken about special situations, but still no one really paid real attention, and everyone kind of missed it. So I feel once Aquaguard will list under a new management, so definitely, corporate governance multiple will increase, revenues will go up, margins will go up, everything will happen. So in terms of framework, for me, what I like is a demerger is good, but when the demerger is followed with a promoter change, that is very good. Now, a demerger is good, followed by promoter change, but even in the promoter change, if a crook is going out and a great guy is coming in, then you have to go all out and make it a big position. So I'll give an example of not Crompton Greaves, CG Power. CG Power, the outgoing promoter, was, of course, there were some question marks on corporate governance. But the new promoter who was coming in my eyes, India's best promoter, Murugappa Group, where they have proven that they can run businesses and scale businesses. So when that happened in CG Power and when they went to the banks, and it was happening in front of everyone's eyes at 5 rupees, 6 rupees, 7 rupees, 8 rupees, 9 rupees, 10 rupees, no one was interested. People were buying Asian paints and people were buying, all kinds of the same thing going on, the same coffee can and all those things. But this stock went from practically 5 or 6 rupees to 200 rupees. So when a promoter is changing, and especially when a okay promoter is going out and a great promoter is coming in, along with the demerger, you have got to, and if you like it, of course, then you have to make it a bigger position. So it's of course a lot of judgment involved, but a framework can be made around these things, the variations I spoke about. There are too many variations to talk about right now, but you get what I'm saying, right? There are different types of special situations.
Yes. So if I just to summarize it, see, you talked about again prefer structural changes versus cyclical. Second would be focus more on companies that you believe in, the story. And
Yeah.
third is, of course, if there is a demerger and then there is a management change, and if the pedigree goes up, then that's a heady cocktail. Now, one question that I had. So again, as you talked about, there are multiple types of special situation. Now, do you have say so within those categories? Are there certain categories that you seem that where you feel the dice is loaded in our favor more often than not, and are there say special types of special situations where the chances of making money or rather losing money is on the higher side? So any just based on your experience in the past, like demerger tends to make more money, demerger plus say for example management change you talked about, is most value accretive, but are there say other ones like bonus issue or rights issue where chances of making money is slightly on the lower side or buyback? So if any thoughts on that, if there is a category that you have in mind.
Yeah, there's a long list of variations, as I said. There are many different things with small changes. And of course, the best of the best, where the dice is loaded to fall in your favor, is demerger plus promoter change, especially if a crook is going out and a good guy is coming in. So I'll give you an example. This is a hypothetical example. Let's take, for example, a not so great run bank. Let's take, for example, South Indian Bank. Okay, it's a average bank. Let's say average bank. Let's say poorly kind of run bank. Now, let's take an hypothetical example. What will happen tomorrow morning if there's a press release that Aditya Puri, coming out of retirement, new chairman of South Indian Bank? No one is even going to wait to see that earnings will clear up, how it will clear up, what will happen. The bank will re-rate, shoot up, probably double, triple over a period of, a short period of time. So promoter change, especially when average is going out and great, like I'm talking about great is coming in, like Murugappa is great, Aditya Puri is great, those kind of guys coming in, it can change the dice is completely loaded in your favor. And of course, if you like the space, if you like the, for example, the banking space, and if you think Aditya Puri will repeat what he did in HDFC, go all out and buy it. In my opinion, of course, you must like it, do your due diligence and everything. But framework wise, the best of the best is this: demerger plus promoter change, especially if the bad guy is going out and a good guy is coming in. Now, where you have the least chances of making money in a demerger is when it is fairly valued, but you are buying out of FOMO of a special situation. For example, when Piramal was doing a demerger, it was very nicely valued at about 2,800. The price was announced, and due to FOMO, I think it went to 3,000 or so. And we like, what? There is nothing on the table here. I mean, there is not that that factor is not there. Like both the financial services and the pharma business are pretty decently valued. They are great businesses. Okay, I agree they are superb businesses, but very decently valued. So we said no, this doesn't make sense. And it is just announced. It will take still 1-2 years. What if something changes in that period? So we just avoided it, and thankfully, so it fell from 3,000 something to 2,400 now. But if Piramal goes to 2,000, then I think it'll go straight into our portfolio. So the lowest chances of making money in a special situation is when you get in too early, and when you get in a fairly valued company where there is not really a value unlocking going to happen. Value is already there. So you want to get in where the value is going to be unlocked.
thanks, Neil. So one question. Sorry, so there are few corporates or companies that are known to basically merge or demerge companies at the drop of the hat. You have examples in pharma, you have examples in, even in commodities. So how do you, take care of, or how do you consider those situations? Do you take it case by case, or you think, okay, maybe it's management, they are just relying way too much on and I say restructuring to create value. So maybe I will give it a miss. I don't want to name companies here, but I hope you would some companies to do that. So any thoughts on such categories of
That
promoters?
particular promoter and the particular group has created a lot of value by doing a lot of these, like Sequent came out, then Solara came out. Solara came out at 200 and 30/40, and it fell to 120 or 130, something like that. And from there it shot up to 2000. Then from 2000 now it's down to 600, is a different matter, but it created the value. And special situations will keep creating value till the time there is, something which is actually there for the value to be. So, like, even basically, what is the idea of special situation? It doesn't matter if a promoter group is doing it often or not. That is not the point. The point is the value giving, is the market giving valuation for a particular asset inside a big conglomerate or not? And if the market is not giving valuation to a small unit under a conglomerate, then that special situation is going to work. For example, Strides has Stellis inside. I believe right now Stellis is available at a, you know quite a free kind of valuation, but I don't know if it will happen or not. It will not happen or whatever, so we don't own it. If it were to come near a record date, or if it is actually, creditors approvals have come, then, I think particular, I mean, I could be wrong, but I feel Stellis is available for free over here. But we don't own it, and we have no intention of owning it. I mean, so these are the risks. You cannot get in too early.
Yeah, Anil, on those lines, since you mentioned about Piramal, that while the date around which it was announced, it was around 3000, and if it comes to 2000, then you find value in that. So, I mean, how are you valuing Piramal? Like, I mean, 3000 is a bad price or 2000 is a good price. So, any thoughts on that?
So what you do simply, basic things, like you first of all compare with the historical valuation of the same stock. And on the historical level, if it is on the peak valuation, then you say, okay, fine, it's unlikely that it's going to re-rate more than this. And then you, of course, compare with the peer group and see, if everybody is trading at this price or not. So I thought when we compared the NBFC and we compared the pharma, we thought there is no, the whole point of special situation is like you need to know before buying. Like if I was, at 1500 rupees, for example, I would say that the NBFC is available largely for free. That kind of words should come out of your mouth, and then only you should get into a special situation. At 3000, I'm giving valuation to NBFC, I'm giving valuation to pharma, then why a special situation? That company doesn't require the companies to break up. The value is already there on the table. Like it's value unlocking has happened. I mean, a splitting of those two companies at 3000 is not going to make it go to 4000. I hope I'm been able to articulate properly. So there was nothing on the table. It's just on paper that they're separating. But on paper, something separating doesn't mean the valuation has to go up. But sometimes in the market, you don't market is not giving valuation to something. That is the time you have to do this, participate in a special situation, because when it will list on its own, it cannot trade at zero valuation. At 1500, if the NBFC lists on its own, it cannot trade at zero. It will trade at, let's say, 1.5 times book value. And then if you do the back of the envelope calculation, you'll come to the conclusion that, yeah, at 1500, the stock could double.
Okay. Okay. Thank you. I mean, just to highlight, the same stock was, logged in lower circuit sometime back. I think on result day at 600 rupees or something. not long back. I
Yeah, yeah.
mean, I don't know. Price is something I'm not able to understand how a 2000 is a fair price or something like that. Also,
So, nothing. No one
since we
can
are
tell
talking
what is
about,
the actual. You have to think what is in the band where you like it.
okay, fine, thanks.
Neil, by just a follow up question, and again, it's awesome always hearing to you. On the position sizing, so these special situations sometimes take much longer than anticipated. It might take like 6 months, 1 year. Like recent situation of embassy itself, right? Even though some of the approvals are coming in, but market conditions might become unfavorable, and we might have anticipated that 3 months, 6 months it will happen, but it drags to like 1 year, 1.5 year. So in such cases, how do you structure your position sizing? Do you go all in initially, or you average up, or you add it in different time frequency? What is your thought process in playing these kind of special situations?
Yeah, that's what I told you, Vivek. Bhai. He, you, the
Neil
biggest.
Vivai was not here at that time, so I guess we can once again repeat that.
No, no, exactly. That's
No,
what
no,
I'm
no.
going
If
to
it
say.
is already covered, we can skip. That's fine. Gilbert.
Yeah, no, I just said the biggest risk is to buy these special situations too early. The biggest risk of a special situation is to buy it on announcement because it gets delayed and delayed. The best time to buy is when the creditors approve. If the creditors approve, then you know in the next 3 to 6 months it's going to go through. So, for example, GMR, I was targeting it to buy it, but I was so scared that I didn't know what is going to happen. So, but the day the creditors meeting was supposed to happen, I thought, chalo, now it is definitely going to happen sooner than later. At 26 or 27 rupees it was, we bought it. And the value unlocking started happening from that point.
Perfect.
Perfect.
And
And
still, again, at that point, also you will go all in, right? You will not like stagger your position sizing, if I understand correctly.
yeah, yeah. All in the from the point of view of how much I want. If I want to take 5% in GMR, then all in 5%. Then I will
Perfect.
not buy 3% and 2% and one, like not like that.
Understood. Understood. Perfect. Perfect. Thank you so much.
Do we have any other questions from the mods?
Hi, Nil, this is Satish here. I have a question for you regarding valuation metric or the process what you follow for evaluating new age tech companies. Can you please help us? Because all these new age tech companies, from a business point of view, they all look like special situations because their PU looks very high. Their marketing expense are exorbitantly high compared to the revenue what they have been earning as of now. How do you value them before you take any position? For example, whether that is Nika or Zomato or Cartrade. So they have their own flavor, but their core advantage is using technology in their favor. So how do you handle that? Thanks.
So, as I said earlier in the discussion, that when I talk about tech, almost entirely our book is filled up with traditional businesses which are transforming due to tech. We don't own a lot of these new age tech companies. We do like out of these new age tech companies, we have small positions, tiny positions in Zomato. I have a position, tiny position in Car Trade. I have a decent sized position in Nika. Now, I really love Nika for many reasons. I also understand it is expensive, and seeing what is happening globally, maybe who knows, it falls some more. But I think that Nika is not understood very clearly by the market in general, because the things that are happening in China with video commerce and social commerce, India is not even taken baby steps yet. And if social commerce and video commerce kind of picks up in India, things like Nika, in my opinion, and of course take it with a pinch of salt, could probably grow their revenue at, let's say, 30% for the next maybe 10 years. And the difference here is to understand that they are very, very profitable at the core. They remain, they choose not to focus on the profits. Let's put it this way. Unlike a Paytm, which is not having that core profitability, Nykaa has extreme amounts of profitability. It's just that they focus on the growth. And for growth, you need to hire people, you need to have costs involved. So you have to front end a lot of those costs. So the profitability gets masked. But in my opinion, steady state margins for Nykaa are between 20 and 25%. Nykaa has not even begun its actual journey of what it really could be. In my opinion, the biggest revenue drivers for Nykaa are not this e-commerce. E-commerce is just the shell and of what is getting inside. The actual profitability drivers are going to be ad revenue, and it's going to be the video commerce business when they get into it, if and when they get into it. So I just feel that I have this insight about Nykaa, so we just hold it. And right now the position is 3.69% in the fund. And I'm indifferent. If it goes up, I'll be happy. If it fell to a very reasonable valuation, let's say if it falls 50% from here, that will make it, I will actually make it a 10%, 12% kind of position in the fund. And that 10 or 12% position, I don't have to worry about for the next many years. So I look at these companies like that. I have no short term view. I'm very indifferent. If car trade were to fall some more, I'd be okay. At a reasonable valuation, when they start trading at valuations of traditional businesses, I'm happy to increase my valuation to car trade. Zomato is one company which I don't understand as to how the profits are going to come. So we have a tiny position, but that is somewhere where I am a little bit scared myself. I don't know whether I'm right or wrong, but in Nykaa especially, I think I have a lot of comfort, and I don't care even if it fell 50% from here. I probably buy much more on the way down.
Yeah, thanks. Maybe I didn't ask the question
I have one more
properly.
question once other mods
Wait.
finish.
Yeah, once again. Yeah, Neil, maybe I didn't put across my question properly. My question was not towards any particular stock. By yeah, I understood the first initial part of your answer said that you originally invest in traditional tech companies, but my question was more towards: is there any framework that you follow to evaluate newest tech companies like this car trade, blah blah, or the SaaS companies or PaaS companies? Because they are very difficult to evaluate because the dynamics are too many in those businesses. But is there a framework that you follow? Suppose if you want to buy a company like Freshworks or some other SaaS company, how do
Yeah.
you value them? So do you compare them with the traditional software services business, or do you have a different framework? Maybe I wanted to ask that, not any stock specific question. Sorry if I have confused
So
you.
a lot of these new age companies, let's say the SaaS side of things, where you have to focus on the LTV, and then you have to focus on the CAC, and these kind of metrics give you a good sense of what the business is going to be like. So if a client is going to stay with the company for, let's say, 6 or 8 years, then you know how much to spend on growth. So it becomes a little bit predictable to figure out what the growth is going to be like. So these are some of the frameworks, or some of the checkpoints that I have to look into before I get into a business. And of course, then uh, the growth rate and whether I really like the industry or not. Are they doing big ticket things or small ticket things? And what is the overall opportunity size? Because at the end of the day, a lot of investing depends on risk reward ratio. Like, for example, when we do startup investing, I know startup investing is very, very risky. I know if I put 1 rupee in a startup, there's a good chance it will become zero. But I do know that if it does work, that 1 rupee may end up going to 100 rupees. So when I see that kind of risk reward, I'm more inclined to take that risk. So, and I feel that I have the insights in some of these companies because I've been tracking them very closely, and in terms of what trends are happening globally. So something like a e-commerce is going to develop into a video commerce. I think I know it, that it is definitely going to happen. And I think I know that a lot of the of course, I will sound arrogant and not taken in the right spirit, but I think a lot of people in India don't understand this migration from of e-commerce to video commerce. Uh, but it's going to happen in a big way, and people will get surprised with what Nika ends up achieving, for example. So that's the reason we get into these talks. It's about the vision as to what these companies may end up doing. And framework wise, of course, the checkpoints are what I said in terms of what we look in the internals.
Okay.
Thank you.
Yeah. th- Can I ask? Okay. At the risk of sounding negative, Neil, I have this follow-up question. Since you mentioned about Coffee Can and how they were buying, like, the
Please
framework allows you to
don't.
buy.
I was just in the spur of the moment. I'm not saying bad
No, no,
again.
not that. I'm just doing. You just listen to the question. You know, they were buying anything at any valuation. And similarly, don't you think the stocks like the new age tech that you mentioned are also similarly framework, but with a different thought process.
Okay.
Also, to
Right.
add to it, if you, I mean, you obviously are following U.S. markets, so the new age tech stocks or the new age stocks, how they are falling like nine pins there, and even the stock you mentioned at the start, Freshworks, so that is also trading like all time low. So, what's your take that the market is getting impatient or something like that? Maybe it can happen in India also, like it is happening with Zomato or maybe other stocks also, Policy Bazaar and all.
Yeah, yeah.
So, your
So
take.
a lot of these stocks are falling quite a bit in US, and at the end of the day, you cannot blame them. I mean, there's nothing wrong with the businesses. The businesses are doing quite good. It's just a call on the valuation that some of these stocks listed at insanely high valuations. For example, Freshworks went to America to get that high valuation compared to what they could have got in India. And things changed overnight because interest rates were set to go up. So it fell. So even at this price, if you see at $19 odd, it is not super duper cheap, but it's getting there. I mean, if the story plays out, it'll end up creating a lot of value. So the idea is that comparing this new age tech companies to coffee can, like, right? So in same way, the valuation is a question mark. The only difference here is that, again, please don't take it negatively. uh, I feel, and I of course have the right to be wrong also, in coffee can, it's just my opinion that the best years of growth of those businesses are behind them. The key difference here is, while the valuations are high, the best years of growth are ahead of the companies. The coffee can companies may grow at 10% per year for the next 10 years or lesser than that. These companies may end up growing at 30-35% for the next many years. Some of them are growing at 50, 60, 70% per year. So the key difference is that, while you are right that the valuation is a hazy mark, but which phase of the business they are in, like, so these new age businesses are having the best years ahead of them. That's the only difference. And
Neil,
if you're going to pay expensive valuation, then buy a company which is going to grow very fast.
Neil, I just have a quick follow up.
Okay, please go ahead.
So you've spoken about coffee can as a basket, but I've always noticed that you've always excluded Bajaj Finance from that basket, and you've always addressed Bajaj Finance differently. You held it also a lot. So would you say that even for a company like Bajaj Finance, in your estimation, the best years are behind us?
No, I think Bajaj Finance, we are very happy with the company even now. We have not sold anything. But it when it had fallen, no, it was giving a great entry price in terms of valuation. Now again, it has quickly become expensive. But yeah, I mean, it is expensive. But I think it will grow 25% for a while more. So I don't think the best years are behind. Best years are still ahead of it.
This reminds me. This reminds report that was recently written by an analyst wherein he gave a sell on Bajaj Finance, but also added that there's like good possibility that we might be wrong on this call. That was
Like we
quite
always have been.
so, Neil, you mentioned that you are very confused, like what Zomato is trying to do, and you also mentioned that the QSR business is looking attractive because of the reduced cost structure due to these platform businesses like Zomato and Swiggy. So suppose in the near future, I guess there might be a duopoly or a monopoly in one of these, right? Zomato or Swiggy, one of these might survive. So do you think that then the this cost structure might expand because like then these platform will command whatever like they other players will have to follow whatever the platform is asking them. So that's a very big risk, right? Betting on the platform.
So there are many ways to answer this. I feel the competition will sustain here. Even if one goes under, somebody new will come. That is always going. Like nowhere, only one person is going to be there. Somebody will come in if somebody big goes out. So right now, also, I think I heard somewhere one of the big conglomerates of India are planning to enter food delivery. So I don't think that being a big risk. They already charge quite a bit to the restaurants. If they increase their charges anymore, I think they will be in a kind of a trouble. So I don't see there's a risk of that happening. Personally, of course, you don't know what can happen in the future. And also, I think what I see is a lot of these companies are now focusing on selling on their own websites also. And I'm sure Devyani, Sapphire, they are planning or doing their best to do takeaways on their own also. So they save on the margin, but they're still long way off. They still depend on these guys.
Right, but then the cost structure will expand like the kind of we see in at Domino's.
In what? When will the cost structure expand? What will happen?
Because,
I mean, if
because
they
they
do the
will have to
delivery on
like
their own.
maintain the entire infrastructure, the fleet of people to deliver,
Correct,
right? Mm-hmm.
correct. So I'm sure they have a plan in mind in terms of what they want to do. Maybe they want to do a mix of both to be de-risked from one side or the other, right? So I do know that they are planning to do this, and while right now is still more to do with these platforms, but going forward they will have some idea as to how they want to do it.
And
But yeah,
Neil,
you're right. Cost structure may go up a little bit.
Neil, just a follow-up question. And how do you see Dunju?
Dunzo is a yeah, you're right. So I told you right. Reliance is looking to explore this space. So I don't think it's possible that only one person will survive here. So they're going to be a lot of competition here.
No, no, no. Dunjo have some different strategy or some modus operandi is different.
Yes,
So how?
Dunzo is helping out these food delivery players,
Yeah. So means
right?
like Zomato can see it as a means. Don't you see Dunjo as threat to Zomato? Because see, Zomato take around 20 to 28 to 29% of the revenue share of restaurant. Unlike Dunjo that take charges per delivery around 50, 60 or $100. So don't you see more people shifting towards, or the more restaurant will also prefer towards delivery from Dunjo or something like that?
So that's what I'm saying. So it will never be a situation where only Zomato will control the market. There will always be new players. As a disclosure, we have an investment in Dunzo. So we do think that there is scope here for them to do something nice. Uh, so yeah, you're right. You're right. So Dunzo can be a player here.
So
My question now. Sorry, Pramesh,
yes,
please.
yes.
Okay, thank you. So, as ever, insightful. My query is, since you seem to have mastered this for India at least, and your results of your PMS and your small case speak for themselves. How many people uh, are there in your team, Neil, to do the vetting of the many opportunities that come your way, come our way? And so, how many people and how many opportunities are you looking at, let's say on a monthly or a quarterly basis? From which, what percentage do you choose? in your portfolio picks, either in the small case or the PMS? That's my first question. Once you answer, then a follow up. Thank you.
So we are tracking every single thing that is happening in the special situation world. To the last point from the first point, we have a team of 15 people, and we've kind of made a database where we are tracking post spin-off, pre-spin-off. We are tracking potential spin-offs. So we have baskets where we are tracking them, like monitoring them regularly. And I think we are covering largely the entire universe. We are doing keyword based, uh, keywords are helping us in tracking anything and everything that is announced daily. So that is also helping. So a team of 15 people, quite sufficient for our size right now. And, you know, the amount of opportunities that there are there, we end up taking very few and far between. Like, we end up rejecting more than what we end up buying.
So is it like 5 to 10% finally make it to your list, or less than 5%?
Yeah. Let's assume 5 to 10% because we evaluate so many. So I have not actually worked on the actual true number, but it would be 1 out of 10 idea.
Okay. The second thing is, I don't know the context for today. Was it that you are announcing your US fund and therefore this opportunity to speak to us? And my final fond hope is, since we're picking so many good ideas from you and we're also refining our art, I'm hoping that every time you speak, there should be someone else from the audience or the moderators who speak about good opportunities that you can give your opinion on and hopefully include in your portfolio. Thank you.
Definitely. I'll be happy to do that.
Neil Parvez over here. Good to speak to you again, buddy. Just wanted to ask you a question about one of the special situations that you were very bullish about, which is India Bulls. And I think Monday is India Bulls Real Estate, and Monday is uh, the the date for the NCLT to come to some sort of order or whatever. How do you see that playing out, Neil?
Hi, buddy. Good evening. So as I said, I like this particular special situation. I think re-rating is going to happen after this merger goes through. It becomes one of India's largest players, available at one of the cheapest prices in terms of peer group. And corporate governance issues will be in the past. So re-rating on paper should happen, but I guess it will happen post, not pre.
Which
So
is what
Monday.
time are you looking at?
Monday is a big event actually.
Yeah, Monday is the big event, but then what happens? How do you see it playing out after that, Neil?
I don't think I can hazard a guess. I think the market is in a wild mood itself. So I do think there will be value unlocking over here. That's why we own it. It being a cyclical, we don't own too much of it, but I think it makes sense to be in our portfolio. So we own it.
Great. Also, just to let you know, I had sent you some information on Satya Industries a while ago, and it's played out very well today. We've got fantastic results on it, so do look into that, Neil.
Congratulations. I will surely do so.
Yeah, great.
One final follow up, Neil. Are you looking at NFT crypto because you say your tech and special situation? Are you doing anything? Will that eventually be part of your portfolios?
While I'm studying the how it works, and I'm very much interested in it. I think this whole concept of the metaverse, the concept of NFTs, I believe these are not fads. I feel these will do good going forward, but more from an investor's point of view, like how we will benefit from investing. I think there is more to do with what we can actually do to create wealth for ourselves over here. Like, for example, a lot of these things, like we can make our own NFTs today. So if I want, I can go and mint my first tweet and make an NFT out of it and sell it somewhere. So I think there is money to be made for someone who can think differently. So NFTs have to be taken seriously. So is the metaverse. It's still early days, but I think there has to be a different thought process here. So on the investing front, I think some of these content creators like Saregama and Tips, they will have a new stream of earnings from NFTs. They are going to be able to mint a few of these songs. For example, let's say they collaborate with some singer and they make only one copy of one pretty good song. They're going to be able to sell it at a pretty cool price or something from their catalog. Let's say if I want to be the owner of some great singer's song today, what if these guys are able to make an NFT out of that and say, Neil, there's only one copy from today and it belongs to you. I may be willing to pay a great price for something like that. Like let's say a Mohammed Rafi song or a Lata Mangeshkar song, where one of their song, I am the whole and soul. Only I can listen to this song henceforth, no one else. So I think these guys are going to have a big future in NFTs. They themselves don't know it, and nor do they understand it yet, because this whole space is developing itself right now. But as investors, we need to study it and keep track of it. Like for example, right now in America, in the US, there is a NFT of a house whereby the house deed is not involved, but the company which owns the house, there's a NFT being made of the company. So you don't have to go through the process of registering the house in your name, this, that. The house deed has been replaced by the NFT. So how does this change the real estate market where, you can just, the way you order things on Zomato, you want to order a coffee on Zomato, you can go on this platform and buy a house just like that. But without the need of going through all this crazy paperwork and all these things, just go and buy the NFT of the company that owns the property rights. So it's amazing what is happening in the world, and we need to actually pay attention over here. What we have an advantage is that we are curious learners, all of us. We are all like, sitting here talking about it. We are not shunning it off. And I feel the edge is over here. The edge is that if you go on Twitter, you see a lot of people are mocking each other. The biggest joy a lot of people are getting is when some of these tech companies are falling. Their life's motive right now is to laugh at others when somebody else is probably suffering some loss, or somebody is buying something tech company and the tech company falls, they laugh. But they need to go and figure out, can they actually benefit? That's value creation. So we need to actually focus on how can we create value for ourselves as investors, and also as sellers of potential NFTs. uh, if tomorrow, if today you have 50,000 followers on Twitter, you make your mint your first NFT and just keep it with yourself, and let's see what you end up becoming in the future. And maybe you want to sell it, you may end up making $1,000 just like that. So these are pretty cool times, and I think we need to learn a little bit more. There is a guy, a student who wanted to go from France. He wanted to go to Silicon Valley to begin a career, but he was very, very poor, and he didn't know how do I go from France to Silicon Valley. So what he did, he tokenized himself. He actually, the kid tokenized himself, and he sold tokens of himself. So 35% of his earnings for life go to the token buyers. So these are cool times. Things which you never heard of in the past. A IPO of a human being. Basically, that was an IPO of a human being. So can we figure out something like this? Like, today, if you have a great investment opportunity, but you don't have money, what do? Can you go and actually tokenize yourself, raise money like that? I mean, I feel this is a time like none other for people who are actually in the process of learning. And let's not be in this mocking phase. Let the tech stocks fall here. What do we have to do? Can we learn and do something in the rebound period? where which kind of these tech companies are going to really come back with a bang and go up like 20x, 50x from here. So I think it's that kind of period right now. We need to learn.
Thank you, Neil.
Thank you, Neil. Neil, just one question from my side. You spoke about how the change of promoter in CG Power was value accretive. So I'm trying to draw a parallel out of it. Say a case like Dish TV, um, where the lenders are trying to initiate a change in promoter, right? But of course there are some procedural issues around it. So how do you try to time that? What are the signals that you look for, in terms of say board meetings, or in terms of say other signals that you can expect?
So it's a simple answer, right? The You have to be swimming with the tide, even in the special situation. For example, like let's go back to our hypothetical example. Aditya Puri coming in can change the fortunes of South Indian Bank. Definitely he'll do it. 9 out of 10 times, definitely he'll make it a great bank. But can a Aditya Puri kind of guy go to Dish TV and do anything there? A lot of things are out of his control, right? So I don't think a promoter change may make such a big impact in a sector like, or in a space or in a company like Dish TV. Just my opinion. Of course, I could be wrong, but you need to have low hanging fruit where you know that this guy will come, and just based on this guy coming, first of all, bank will get re-rated, and secondly, the earnings are almost 9 out of 10 times are certain is going to go up. But I don't think the same can happen in Dish TV. It's a very difficult space, very very difficult space.
No, no,
No,
sure,
no,
sure,
sure,
understand.
sure.
But just assuming, removing the industry from the consideration, say it kind of currently trades, the multiple that it trades currently is at a 50 or a 75% discount to its peers, right? So just from that sense, so one thing is, of course, I agree. I mean, it could be Dish TV, it could be any hypothetical company here, but just in terms of do you just wanted to check? Do you track these cases? And of course, we've seen few of multiple of them in the last year, where kind of lenders are trying to initiate a change in promoter due to the pledge shares that they currently own. So what are the signals that you look for? It could not be Dish TV, but can be other companies as well, or
No,
similar
I
situations.
think, as I said earlier, this is a big trigger to buy stocks. But the whole point is you need to like the underlying asset, and you need to know that the guy coming in is going to change it. Definitely going to change it. It needs to be as simple as me leaving the bat and Virat Kohli picking up the bat. He's definitely going to score more runs than me. It needs to be like that. So if you can say with a high degree of confidence that yes, this guy is going to come and take over the reins from that guy who's not so good, and 9 times out of 10, if can you say put your neck out and say ki, yes, this guy is going to change the fortune, then definitely you should buy it. I don't Let's forget this TV as an example, but as I said earlier, right, demerger plus promoter change is the best special situation there is, especially if demerger plus promoter but a crook going out and a great guy coming in. That's the best of the best.
Understand.
Hello, Neil. Do you see any means special situation arising in case of the G Entertainment Limited, which is going to merge with the Sony?
Yeah, that is a proper special situation, that merger. It will create a lot of consolidation. It'll give them pricing power. So yeah, definitely, I do think so. But वो होगा कि नहीं होगा, कैसे होगा, what timeline? So question marks are there. But I do think if the markets fell, there are some of these stocks. If they all like some of these stocks, if they fell 20%, for example, from here, like
Yeah.
Piramal if it fell 20%, or if Bajaj Electricals fell 20%, or if NIIT fell 20-25%, some of them become no-brainers.
So, any idea how the Invesco will behave in that?
As I said, no, I don't have the idea. So that's the risk. So we need to wait closer to the record date in this case.
And that promoter side, as the Puneet Goenka, actually, Invesco intention is they want to throw out the Puneet Goenka.
Yeah, so let's not comment too much because this is a very evolving situation. So I don't want to comment on. But yeah, it is very interesting, is all I can say, and we are tracking it quite closely. We don't own it, but we are tracking. I think if something concrete happens here, one way or the other, it becomes a play. Hello.
Yeah, yeah.
Yeah, yeah.
Anyone
Anyone?
else any question?
Hi Neil, this is Srinivasan here. I have a different kind of a question. See, there is a lot
There
of
is a
things
lot of
about
things about.
small case being, a cheap mutual fund, but it's more of a comparison with PMS. But since you do both, right? Do you see a major difference in the risk behavior or the investment behavior of your PMS investors versus small case investors?
There are different types of investors, both of them. Small case is largely we are dealing with retail investors. Uh, and PMS is of course much more savvy investors who have multiple PMSs. Their portfolios are very, very big. So they know that, markets ups and downs, what can you, like, you have to, but so it's a different mindset, firstly. So it's a different way of dealing with both sets of people. So yeah, definitely. I mean, small case comes with a lot of challenges, I feel, but it will be a great satisfaction if someone can actually provide a good product to retail investors and help them get out of this trap of trading, get out of this trap of taking tips and all from other people, and just focus and do SIP. That's it. So I think small case is actually serving a good purpose here.
Okay, so then
Okay,
can
so
I
then
can I
can I
paraphrase your thing to say that hopefully the small case investors will have the discipline and grow enough wealth to become PMS investors.
that is the point. That is what we are aiming to do. We want a lot of our small case investors over time to be able to come over to the PMS, generate that kind of wealth over the years, and then come over to the PMS. Otherwise, that is the main kind of criteria. That's the reason we started with the small case. We want to do a good job for everyone, but of course, at the end of the day, we are looking at it's like a backward integration and forward integration. So I guess if there are no further questions, I think we can call it a night over here.
We
We
generally do
generally
have some brief moments of silence, and then someone comes up with a very good question. So that's a very normal feature of our clubhouse rooms.
no problem, no problem.
But I guess it's been like almost 2 hours since we started this session. So
So
we can perhaps take last few questions if anybody has, or if not, then we can. Oh,
I guess next time I'll love to join this panel and ask questions. I think asking questions is a lot of fun.
definitely.
Yeah, Neil, I heard you sometime back that you are aspiring to launch a US focused small cap. So could you just speak about little bit about it and what kind of companies you are looking to invest in US?
Yeah. So when I started out with the PMS, I had a clear focus or a target in mind that let's be the most innovative people over here in this financial services space, because I think the entire financial services space, most of the legacy people are sleeping. They are not getting the big idea and emerging areas. So we did the PMS with a different thought process that we do special situations and technology. Now we are launching an American, basically a US. It's not a small case. Small case is a brand, so I will not say small case. It's kind of a small case for American equities. We are launching that as early as next week, which will help normal investors to start building American portfolios. We are going to be focusing on the tech side, like esports, gaming, SaaS, technology, like everything on the internet kind of side. And we are also up and running with our startup platform. So we want to do these three things for the time being, and we want to become a one-stop destination where you want to do PMS, great. You want to invest in startups, great. You want to do American investing, great. Everything you can get in one place. Currently, what is happening is that you can invest in America on your own. All you have to do, go and open an account on Vested or on Interactive Brokers. But what do you buy? Like a lot of people who are not full-time investors, for example, they have difficulty figuring out in India what to buy. Now, going to America, how do you do the research? So if someone can make an ETF kind of a basket where you just go and subscribe to the basket, let's say you want to put $100 and do an SIP. So we are making a product like that, an SIP product. Go and invest in the entire basket, knowing that somebody who understands the space, who looking at the US market, is also like done a research and made a basket over there where you can go and look at it. If you like it, you can subscribe to it. Kind of like a small case for American stocks. So we are launching that shortly. We'll announce it soon.
But Neil, if you invest in the US through the fund, does it make sense with the tax implications and also the exchange rate, etc.? Does it still work out to be feasible as or
So
profitable?
the tax rate is 20%, but it comes with indexation benefit. So let's say you hold it for 2 years or 3 years, so it keeps reducing. Net On a net level, the tax rate keeps reducing. That is first. And secondly, in terms of the exchange rate, you rightly said, while going, you have to pay something like a 1%. You make a loss of 1% on the exchange rate. But over a long run, if you keep money for 10 years in America, uh, you get a diversification in the currency also. And I feel that is a little bit important considering all the geopolitical issues around us. Uh, some part of our wealth, even if it is 5% of our wealth, if it's if it's in the US stocks, you have some dollar assets over there. So tomorrow, if something adverse happens here, you have something there. So I think the rupee will keep depreciating over the years, and the dollar is. You need to have some exposure, in my opinion.
No, are you saying Neil that it will be a dollar account which can be accessed in dollars
Yeah,
also?
yeah, of course. It's an LRS. So, so we are partnering with Vested. Vested is the broker. So it's an LRS thing. The RBI has officially announced that Indians can invest $250,000 per year in America or in global equities, basically. So we have tied up with Vested. We have made a vest. They call it a vest. They don't call it small case. They call it a vest. So we've basically made a basket of stocks. You can just go and you will see over the Negen Capital's basket. You can just click on it. It'll ask you how much you want to invest. If you put $50, $100, it'll just buy that much worth of shares in your account.
So, Neil, I happen to be an American citizen holding a US passport. So now, if I had to invest also, I could just do it through your fund, or would it not
So there
work
is
for
no
anybody?
fund. There is no fund. This is a research product where you will have to sign up as a broking client with Vested, who's our partner in this case. And
Right.
once you sign up with Vested, there are all these baskets that they have made. And so ours is one basket where we've done the research. Now you can just go there and buy how much ever you want to buy and regularly keep buying, doing SIP.
Okay, cool.
It's very
Super.
simple. It's practically a completely digital product. Register on Vested, go and subscribe to the basket. That's it. As simple as that.
And when you realign the portfolio, is that done by a press of a button, or how is
Yeah.
it
So
done?
when we realign the portfolio there, you get an update that these guys have realigned the portfolio. So it'll not realign in your account automatically. It'll ask a permission that these guys have realigned. They are selling two of these stocks and they are buying two of those stocks. So you have to say, yes, I agree to do this because this is not a fund, right? I am not having the authority to do anything in your port. I'm just managing a research product over here. And you have to give the final approval. Once you give the final approval, automatically the changes will be done.
Super. Sounds very good.
Thank
Thanks.
you.
Hi Neil, Sanjay. Here. I've been following you and the special situations and Negen, and I'm a part of the thing. So I'm very excited about India Bulls as well as the GMR situation. Great results in GMR. I had a few questions for you. One is, because we're also into tech and Saregama is such a huge thing. What do you see? The reason for the huge drop in Saregama at the moment. And part two, have you, because we're talking of OTT and music and TV and production stuff. Have you looked at Mukta Arts? They've got schools, they've got college, they've got land bank, and they've got production, OTT, and a huge library. Thanks.
So no, I have not looked at Mukta Arts much in detail. And coming to Saregama, I think it's a illiquid kind of stock, right? And I think a big player had been exiting. I don't think that big player has completely exited. Uh,
Okay.
there could be some more selling from the big party.
Okay.
But if the price comes down,
Yeah.
uh, I
Good
think,
time for us to buy.
I mean, I cannot comment for others, but I think we will buy.
Yeah. No, I'm part of the opportunities fund, so I will buy too. Yeah.
Okay, yeah, correct. Yeah, so yeah, definitely.
Okay. And
About the
sorry.
investing in the US means what is the minimum amount? Is there any restriction? Means minimum size?
What happens is the US brokers, they allow you to buy fractional shares. Unlike India, where you can't buy fractional shares, US
Right.
brokers allow you to buy fractional shares. So you can even put $50 and a great 15-20 stock portfolio you can buy with only $50, where you'll get fractional holdings.
Okay. Okay. Got it. Thank you.
Hello, Neil. This is Anand here. I have a few questions. First one, just about your PMS offering. So, what is the minimum ticket size for that?
So as per the SEBI rules, the minimum investment amount for PMS is 50 lakh rupees.
And this is done directly through you, or how would that work?
Yeah. PMS is a discretionary product where you have to do KYC with our PMS. And once your account is open, our demat partner is HDFC. So once your demat account is open with HDFC, you do the transfer of the funds and then we manage your portfolio end to end.
Okay, so is your offering on HDFC? If I am already a HDFC security account
No,
holder, it's already there?
no, HDFC Securities is different. HDFC under the PMS umbrella is different.
Okay, HDFC AMC, you're under them.
Yeah. No, we are under HDFC Bank.
Bank,
They are
okay,
handling the
okay.
PMS.
Okay, my second question is with regard to the offering you mentioned in the US market. I mean, you said we can invest in your basket of stocks through Vested.
Yes.
So, what is the benefit to you as a company? Because we are buying the stock, we pay the brokerage to the Vested. So, is there a revenue share between you?
So it's not a revenue share. We charge a subscription fee directly to the investor. So before you buy the basket, you will have to pay a subscription fee that we set up. So I think for the time being, we've set up for 12,000 rupees annually. It's a very, you know, it's not an expensive price.
Correct. And I mean, can do anything. It's just 12,000 flat for irrespective of how many ins and outs of the money.
You want to invest $100 or $100,000, for you the price is 12,000 rupees INR.
And what kind of management do you do to the portfolio? So, say I have invested into a basket of this. Do you do the, what do you say, the rounding up or, that reallocation and all based on your
Rebalance. Yeah, of course. We
rebalancing? Yeah.
handle the rebalances as and when they are required.
So that
And
will
when we do the
be done
rebalance,
across the portfolio.
no. So exactly. So when we do the rebalance in the model portfolio, all the portfolio holders, the basket holders, will get an alert via the app and also via email that these guys have changed the model portfolio. Would you like to approve the changes or not? If you say that no, I don't want to sell Apple, I love Apple, I just want to hold it, then you click no. But if you think that yes, I'll just follow what these guys are doing, then click yes. And then automatically whatever changes we have made in the model portfolio will happen in your portfolio.
Okay, but typically rebalancing and reinvesting and all that happens only maybe 6 months.
Yeah. We are pure investors. We don't do trading. So our idea is to buy companies where we have visibility of few years and do SIP. Simple as that. They don't want to complicate things with trading and speculation. So
Perfect,
we may
perfect.
have one or two rebalances in the year.
Yeah,
So Neil,
that's typically what is done in most model portfolios. So in that case, um, we are basically looking at a long term, benefit, right, for this. So is there any kind of returns that you are indicating or providing for these kind of your
No.
portfolio?
I mean, so we have to. So we are SEBI registered people, so we have to be very careful, and we. I mean, it's not allowed for us to give any kind of guidance on returns.
No, but for the US thing, I'm talking about the US one.
Yeah, yeah. Even for them, I mean, we in India, like being a fund manager, I'm selling to Indian customers, right? So I can't provide any kind of guidance on what returns can come. I will hope to do the best job that there is. Like in terms of our PMS, our CAGR right now is 38.65% for the last 3+ years. So I would hope to do the best I can, but I can't give a number.
Okay.
Yeah,
And last question
Srinivas.
is with regard to, sorry, just one more question. I think I messaged you on the back channel. You're talking about demergers and all that. The recent, there was a demerger of Mothers and Sumi, if you
Yes,
remember, and
yes.
then the stock fell. So, do you have any thoughts on that?
In fact, I don't think the stock has fallen. It's been pretty resilient in this entire carnage where big companies have fallen 15, 20, 30%. Motherson Sumi demerged at 180 and is still at 180. So it's actually held its own. But although we don't own it, but it could get interesting if it fell a little bit. So a lot of
But its
these,
result came out today and it is not very good. So do you think that is because, I mean, quarter on quarter result is good, but year on year result is not, returns are not there.
because you cannot compare, no? The big part of the business is now they'll report separate balance sheet. So year on year, you can't compare. I mean, of course, year on year will look very bad because a big part of the business is out. It'll report separately. So we can't even check probably quarter on quarter.
Okay, okay.
Neil, you were tracking this demerger, Motherson demerger.
Thank you for that.
Happy to answer, buddy. Yeah, yes, I am tracking Motherson. We don't own, but we are tracking. I'm
So
more interested in the other part, which is yet to list.
yeah, so I was coming to that. So do you think the that institutional selling that you keep talking about, because the resulting entity size would be very
Not going
less,
to happen there.
uh, so we'll see the selling in the initial days for that entity?
No, you are likely to see selling in this entity, which is listed.
Acha, okay, all right.
That entity was
Because
the sought after entity. Whoever wants it wants that.
yeah, yeah, but you talked about the regulatory reason, right? For that reason, the funds might sell.
They might, but there will also be a lot of buyers.
Yeah, yeah. So buyers would be right.
Like people
So
like us. I mean, I'm telling you, we'll be looking at it if the right price is there. I hope it sells off, but I don't think it will.
right, right. Thanks a lot. So
Yeah,
you keep talking about opportunistic SIP as well. So could you like elaborate on that? Like suppose we talk a lot in this room about how um, indexing is a really good strategy for most investors, perhaps say 80-90% of investors. So like what would be and you say ki opportunistic SIP is even better way to like uh, outperform the index, right? So how should a person go about following this?
So opportunistic SIP, we thought about one fine day out of the blue. I don't know how we came up with the idea. It's basically pyramiding. So it's like momentum on the upside, pyramiding on the upside, and also on the downside. So anytime a portfolio comes off by let's say 5%, whether it is gone up 100%, and even from 100% it comes down 5%, you buy. And or else if it's you bought uh, at a price and from that price it falls 20 like 5%, you buy. So at every 5 to 7%, or you can make your own range. For me, it's like 5 to 7%. At every 5 to 7% range, we deploy money, whether it is on the upside or on the downside. And what I realize is that this is a pretty good strategy. I mean, it helps you. So, many a times it's not only beneficial to add when the stocks fall, it's also pretty beneficial to add when the stocks rise. For example, today, when we did SIP, we bought everything. So, even the losers got added, like Fairchem fell. So we ended up adding some Fairchem, but we also ended up adding some Sapphire. So you add winners also, you add losers also, so you get spread. So another thing that we do in the SIP bit is that we don't just buy one company, we put money in the entire portfolio.
Right. Thanks,
Neil,
Neil. Neil had another question for you. So he's here. Faircam is one of his biggest holding. So he had a question like you today. It saw a very sharp fall. What's your view on the company?
No, I did not think that the result warranted such a high fall. We're in an inflationary environment here. I mean, there is a lot of raw material inflation, and chemical space. Not many people understand in the first place which chemicals price is going how. Like for example, I'm just telling you on the whole. So थोड़ा बहुत margins ऊपर नीचे होगा. Anyways, the chemical space, specialty chemicals, the normal chemical space is very volatile on margin front, and in this situation, it's even more volatile. So doesn't matter. This kind of result was okay. It didn't warrant a 20% fall in my opinion. So we bought a little bit, but I mean, if it falls some more, we'll see if we want to add some more or not. But whenever we add, we look to add at the entire portfolio level. So one key learning is not to just, if Fairchem has fallen 20%, I'm just going to put money in Fairchem. That will not work. You will have to put money in the winners also, along with the losers. So the entire portfolio must be put some money in the portfolio. Whatever is the Fairchem allocation, that much money will go in Fairchem. Whatever is the allocation of Sapphire will go to Sapphire. So you maintain those weights.
Makes sense. Makes sense. Thanks a lot.
Neil,
And
sorry.
Neil, one more thing. In the recent budget, the government has come out regarding the investing in the US. And means how it works means you say that you can invest in that US market, but in this budget the government has came something about that investing in that US. So actually, it's not clear to me.
So what happened is on the mutual fund side, Parag Parekh and all, and a lot of ETFs like the Nasdaq 100 ETF, they passed some limits beyond the point you can't invest more. So that limit was triggered. So they were not allowed to sell any further units. So that was happening in INR, right? That is happening under the denomination of INR, rupees. You're putting money in Parag Parekh mutual fund, for example, and they are putting money in US. So that is suddenly taken a roadblock. What I am talking about is under the RBI allowed LRS, which is basically you convert your rupees into dollars first and invest in dollars. So that is very much allowed. And after this mutual fund embargo, I think the LRS scheme is going to get a big push going forward.
Yeah, Neil, this is Srinivasan here. Can I add a couple of points? I just want to mention. I think you said it briefly, but I thought I'll put it explicitly.
Sure.
Right. Yeah. So, I think there was a question about vested. I think you kind of mentioned it is like small case, but it probably might be useful to just tell people that it is almost like a small case. I felt that the vests of vested are very similar, right? And they are the non-discretionary PMS. And another thing that people talk about, how much money would they put in. I just want to mention that unless you choose a particular bank, um, most of the if you invest using the LRS, right, there's a lot of transaction costs, so it wouldn't make sense to invest small amounts or invest very frequently, right? So you should do it once in a while. Maybe once a month is okay, but it should be a larger amount. I think Neil was mentioning that. I thought I'd just make it explicit. And again, I just give a disclaimer that even though some of us may be registered with SEBI, nothing that I say at least should be taken as investment advice, but it's just a suggestion, right? Similarly, Neil also very clear, right? And I definitely want to mention one thing, amplify one thing that Neil talked about. Sorry, I'm taking that liberty, Neil. Is that anybody registered with SEBI? He made that point, right? He's registered with SEBI. He should not give you a return indication or whatever, right? So if you're investing in equity, if you're investing in a market product, SEBI expects you to have done the due diligence. And if you ask questions, definitely the intermediary could give you an answer, but nobody can give you even an indicative return, right? And a person who talks about the product but doesn't talk about the indicative return, actually it shows that they are abiding by the rules, and you should probably trust them more. I'm just making this unsolicited statement, right? So you wouldn't find a compliant semi-intermediary giving you any kind of a guaranteed return or any such thing. If you see such products, it is probably an indication that it may not pass SEBI's muster. Thank you. I'll just share that. Thank you.
Neil, I have one final question. As I understand that you also provide a curated list of startups to HNI clients. So could you please share some of the learnings you have drawn from that curated list for the last couple of years, some interesting companies which have come under your watch list, or the trends, if you can talk about, and plus the valuation. Thank you.
So, we wanted to be unique, as I said earlier on, that when you do something, you should do which nobody else is doing, and only then you can win. Then you have a right to win. If you do a good service after that, then you have a right to win when you are the only guy doing it. So, we wanted to do the startup platform. We realized that startups are not accessible to normal investors. Like startups require a check of, let's say, 10 crores. Now, normal investors will not put 10 crores in a startup. It's risky anyway. So we thought, why not create a syndicate kind of structure and make something which is currently not available, make it available. So we have a category one AIF, which is called an angel fund, and whenever anybody becomes our PMS clients, right now they get access to this separate service also, this AIF. So whenever on our platform, sorry, whenever on our platform, if a startup opportunity comes, we kind of give the details to our investors and they can decide whether they want to invest or not. Now, in terms of learnings, there are lots of learnings there. As investors, we never stop learning and we never stop making mistakes. So, we spoke about Vested. Vested was a company which I came till the 11th hour and said, okay, no, forget it. Let me not invest, because I went and took advice of some brokers. So I took some background and asked some people that, what do you think about this idea? I asked a couple of broker friends and they were completely dismissive. Like, why will Vested win? Why HDFC or Zerodha may start it someday and they can completely wipe out Vested. And I thought, okay, yeah, maybe you're right. But I didn't trust my own instinct. Had I invested in Vested when it came for seed funding, I would have made probably 50x already. So idea is to invest in those kind of vision that you think the business world needs. I knew it that I want to invest in America, but I don't know how to invest in America. When Vested came with the idea, I knew that I should go. They are the first mover. But listening to these people, so the first and the biggest learning: stop listening to people. Jobio, even if it is Rakesh Jhunjhunwala saying don't do something, you screw him. You decide whether it's right for you or not. Like, because I have a actual example here. In 2000. I don't know exact year, maybe it was 13 or so. I wanted to buy Bitcoin. Honestly, I wanted to buy Bitcoin. And that time, Warren Buffett publicly and Charlie Munger publicly, this is all rubbish, gambling, speculation, it all is going to all crash and burn. And I thought, okay, if these guys are saying, that must be true. I mean, they are the lords of finance and we should not second guess them. So I said, okay, forget Bitcoin. Let's not buy Bitcoin. So I invested in market. Of course, I did good there, but I ended up missing out on the journey of a lifetime by missing out on Bitcoin at that price. So the biggest learning is don't listen to anyone, listen to yourself. And after that, even if you're wrong, it's on you. But so that is one. And secondly, startups work, right? They are very risky, but if they work, even one startup doing good in your portfolio can make sure you get a very good, satisfying return. So the learning is go for startups which are not burning money. Number one rule. So we have done 5 startup deals on our platform. The idea is go for the guys who are not burning money, who are self-sustainable. And startups do a trick normally. Before a fundraise, they spike up the marketing spend. So they anyways ask a revenue multiple, right? They have no profits. They ask revenue multiple. So they spike up the percentage of marketing to revenue. So look at that metric. If a startup is growing revenue from 100 rupees to 200 rupees, but they last year spent on marketing, let's say 20 rupees, and suddenly this year they spent 40 rupees, that guy is trying to con you, and is likely that guy is going to crash and burn along with you. So we look at this metric, the amount they spend on marketing last year compared to this year. And if the amount is same in terms of percentage and still the revenue growth has gone up exponentially, we love that kind of situation. So incidentally, the first startup we invested last year was a company called ANS Commerce. Basically like the Shopify of India. They're helping companies to outsource their e-commerce. And Flipkart just recently, like they're not the media reports said that Flipkart is in talks to acquire. So we may get our first exit already. So it's a pretty exciting time.
And like, what sort of ticket size do you do for these kind of startups?
Typically, our syndicate will invest between $500,000 to, let's say, $2 million, but we break it up to something like a 5 lakhs per customer, 5
Sounds
to
good.
10 lakhs per client.
Mm-hmm.
Few follow up questions. Sorry, Utkarsh, go ahead. Okay. A few follow-up questions, Neil, if I may, on this startup piece. So the way you talked about is, I mean, how is it differentiated, if at all, let's say, from a Mumbai Angels or any kind of syndicate that is being run in India? Do you kind of provide further help to these startups to grow in terms of making connections or helping them grow, groom them, bring in other partners, or run sort of an accelerator with them? Or is it like more of a spray and pray approach? So that's one. And two, as you said, you are raising as a syndicate, you do about 500,000 to 2 million, and you do only in seed, or is that going up to series A, B, and the follow on growth capital as well? Once you answer them, probably I may have a few more questions.
So the first question is, there are a lot of people doing it, right? Venture Catalyst, Mumbai Angels, IPV, Hame Angels. There are some 7, 8, maybe Angel List also. The key difference is that they are investment bankers and we are actual investors. Investment bankers' job is to sell. They have no investing experience. They have no vision. So we are the only guys who are actual investors who's doing this. So we have an actual edge on these guys. Secondly, we bring a curated list of startups where I am personally putting money. If you go on the Mumbai Angels platform or Venture Catalyst platform, in a year, they will bombard you with something like 100 to 1000 startup ideas. Now, whether you'll do your business work, invest in markets, do US markets, or look at those 1000 startups, it is not possible to study those 1000 startups. So, we are not investment bankers shoving down deals down your throat. We are going to be bringing, let's say in a year, maybe 12 to 15 deals. All those 12 to 15 deals, I will personally be investing also. So you, as a client, know that, okay, fine, Neil is also putting money, the due diligence, all those things. So you have to decide then on the overall kind of thing, whether do you like this vision or not? Do you like this particular thing in esports? This company is doing good. So I'll explain to you in a way that an investor will explain a following investor, and not like a seller of a product, not a salesman. I'll be doing it a actual proper honest product. Of course, you have to take final call whether you want to invest or not. But idea is that we are investors who understand investing, and they are sellers, and their job is to sell it to you. So that's the big difference between all these platforms and us. Our job is to basically source deals from all these platforms and figure out which are the best ones. And wherever
Understood.
I'm investing, I give the co-investment opportunities to my investors. Of course, then the investor has to decide if they want to invest or not, but I will bring it on the table.
Understood.
Understood. So yeah. The second question was,
So second was I mean, how do you kind of help these companies out? So let's say you invested, right? Whoever
I got it.
XYZ.
So I think the second question was also on the what stage we invest. So we don't
One
invest in
is
the stage.
sorry, Neil. One is the stage which is a very vanilla, but maybe more than that. So how do you help these guys groom? Because and kind of, do you provide accelerator support, connections, unlocking doors? How do you kind of help them really? Because I mean, to get any startup from where they are to where your vision is, they anyone would kind of need support. And are you leading those rounds, or do you kind of get other people as well to kind of lead those rounds? And then I have a couple more questions, if I may, just exploring this further with you.
So the first four deals that we did, we were part of the round. We were a small part of a large round. The last deal that we did, we invested in a coffee company. The deal is not yet announced, so I can't name it. This coffee company, we are the lead investor. So we are putting in $2 million, and we're the lead investor. This will be announced shortly. So here we are going to work closely with the company. We are picking up a 5% stake. Our AIF is picking up a 5% stake. So we'll be working closely, and we understand the Starbucks model, and we want to kind of guide these guys, and we understand QSR in a big way. And we did the analysis of what we did in Devyani. We did the analysis in this particular company, and I came to the conclusion that the store level unit economics is better than Devyani International also. And these guys don't have to pay any kind of royalty to the main brand, like what these guys pay royalty. So we have insights, right, of investors, of capital market. So we'll obviously be guiding them as to how to present their books before they do the next round of funding. So of course we bring a lot of things to the table, and our clients include some of the biggest family offices, some of the biggest CEOs. So if they need to do any kind of collaboration, we'll help them in anything that they need, particular this company.
Got it.
Got it. Got it.
So, yeah. So
Yeah. So
sorry, am I going? So following up on that, you talked about, I mean, helping them, and kind of, I mean, helping them groom and going ahead with them to kind of realize the vision, so to say. Um, so if somebody wants to come in into this syndicate, I mean, is your fee structure 220, or I mean, or is there some other way? Do people have right of refusals, negotiable? Could you kind of throw some light? I know it's a bit of a blank page, but it'll be good to see if you have some ideas around this.
yeah. So guys, one just last thing. Let's keep this the last question, because tomorrow morning I have a PMS AIF World webinar where I need to be doing a morning session. So what we do in the fee structure is we don't charge anything upfront. That's again a big difference between the others and us. We don't do this 2%, right? We do a 15% flat profit share. So if whatever on exit, let's say 100 rupees became 200 rupees, then on the 100 rupee profit, we'll charge a 15% cut. That's it, nothing else. So it's only on a performance based. We don't charge this annual fee. I don't believe in that.
Understood. And
Understood. And
how can somebody be a part of this?
so currently it is only available for our PMS customers, our actual clients. But we are very shortly going to make it available for everyone, where you can actually do KYC with the AIF, and the deal will come in the AIF, and you can decide whether you want to invest or not.
Got it. Look
Got it.
forward to
Look
that.
forward to it. Yeah, so we'll put all these details about this American product, the AIF, once it's ready for everyone, and then whoever wants to get in touch with me can actually just email me. My website is nijanpms.com. Just directly email me from there, or send me a message on Twitter or something, and we can talk about anything that you feel like. Right now, I just need to go, guys. It was great talking to you guys, and I hope
Right.
I've been able to add value to you guys. I hope I'm not like bored you on a weekend. So nice chatting with
Fantastic
everyone.
session. Thank you, Neil.
No, very helpful.
You
Thank you.
thoroughly enjoyed it, Mopti. Take care. See you
Thank you,
soon.
guys. Thank you. You take care. Have a good night. Bye bye.
Thanks, Neil. Uh, Guys, if you want to access the highlights to this session, they are posted in the link above. Within 30 minutes from now, I will also be posting the recording of this session so that you can access it.
Can you also send me
Uh,
the recording of the session? If you can email
Neil,
me.
Neil, was that you asking?
Yeah, I'm Neil. Yes.
Yeah. I'll ask Utkarsh. Utkarsh will have access to the recording, so
All right.
Yeah,
he'll
yeah,
be able to send it to you as well.
we'll send it. We'll send it, Neil. And thanks a lot, Neil, for coming by. It was like really nice having you here. Lots of new things we learned today, and we hope to host you for more
Yeah,
sessions.
sure thing. Sure thing. Nice talking to you guys. Take care, guys. Bye.
Bye bye.